Do you want to be a millionaire? It seems to me if you open this video, the answer is yes. But are you ready to regularly invest your money, take risks and responsibilities? That's a more difficult question. Many people want to have millions on their account, but not everyone is ready to get there. A lot of people really love their jobs and specialty, but they still want money. In this video, I will tell you 3 ways to build up $1 million capital while working a job. Yes, it's really possible. So be sure to watch this video to the end. And don't forget to subscribe, because there are more interesting and useful videos on our channel. One of the main reasons why people fail to achieve wealth is their wrong thinking. Most are convinced that the ordinary person is not capable of becoming a millionaire. However, in most cases, wealth people are not only celebrities and top managers with impressive incomes. An entrepreneur, a programmer, an architect, and any other professional can become a millionaire. So regardless of your profession, you can succeed. The first and probably the most obvious way to accumulate $1 million capital is investing in the stock market. The most important step to become rich and creating wealth is to start investing your money. Everyone who wants to start investing should realize that the earlier they start, the better it's gonna be. Let's look at one example to see why this is so. Imagine you have $1,500 and 2 options on how to spend it. The first option is to buy a new iPhone for personal use. The second option is to put money into securities, which basically means to invest it. What will each of these ways give you in the short and long-term perspective? If the phone is purchased not for work purpose, but solely for personal use, then for a certain period of time, you are likely to feel satisfied with the new camera, screen, and very novelty of the purchase. However, with the time, you will get used to this and this gadget will become just common, slowly losing its relevance and functionality. In the long run, the phone will lose its value and will no longer fulfill its functions. If you decide to invest this amount in securities with yield of 10% per annum, then in 5 years you will have $2,415. That is an increase of 61%. And in 20 years your $1,500 could turn into $10,091. Why such numbers? The answer is in the magic of compound interest that investors love so much. If you receive 10% of your investment in the first year, in the second year you will already receive 10% of the original amount, and the 10% you receive in the first year. If you choose the first pass, it would take you a long while you receive the $1,550,000 you spent. The second pass allows you to not only save capital, but also increase it. Therefore, it is important to take the first step as early as possible to maximize your potential profit. Stock market investments are investing in stocks, bonds, and the like. Investing is a complex but highly promising way to increase your capital. There are 2 main ways to make money in this field. The first is to earn income from dividends. Dividends are regular payments that companies distribute to their shareholders as the reward for their investment. This can be a stable source of passive income, especially if you own shares in companies that have a long history of paying dividends. These companies usually operate in major industries and have a strong financial position. This allows them to distribute a portion of their profit to shareholders. Dividends are an attractive way to generate a stable income without having to sell assets. The second way to profit on investments is trading. Let's say you bought a stock in May in $20 and sold it in August for $40. So the idea is to buy securities at a low prices when the market or a particular asset is undervaluable, and sell them when the price rises. But you need to be able to analyze the market, predict future price movements, and make decisions based on those predictions. An important aspect of this strategy is patience and the ability to wait for the right time to sell. This approach can generate significant profits, but it also comes with a high level of risk. After all, asset values may not rise to expected levels, and in some cases may even fall. Both approaches have their benefits and risks, and the choice between them depends on the investor preferences and their goals. Dividends offer stability and predictability, and trading offers the opportunity of greater returns, but needs a deep understanding of the market and the willingness to deal with uncertainty. The key thing to remember is that it is indeed possible to make money on investments, but there is a risk of losing everything. Securities are not insured, so an investor runs the risk of losing all their capital. For example, the company released that shares goes bankrupt, but simply saving money can also lead to losses. The money can become worthless due to inflation. With investments, you can become a millionaire. It won't happen immediately, but the harder you work to achieve your goal, the sooner it will become a reality. And the earlier you start investing, the more noticeable will be the benefits of the power of compound invests. This path will be long, but you will definitely be satisfied with where it will take you. I hope you found it useful and interesting. Go to our channel and watch more videos about cryptocurrency, finance, and earnings. Put a like and subscribe. Token team was with you, and we'll see you in the next video.